Okay, so hello guys and welcome back to this morning's commentary. So I just wanted to cover Bitcoin real quick. So I wanted to focus on Bitcoin and the equities market. Now I just dropped an update on Discord to move your stops to break even on Bitcoin. Of course, I give the limit order in terms of longs on Bitcoin with stop loss. But if you remember the overall analysis, I talked about how we're essentially looking to continue to sell short on Bitcoin, and the long was just to essentially hedge the market. So at this point here, it kind of looks like we're seeing the market react to all of this. So this would be a regular balance, and we've traded into a portion of that range. Now, we have this inefficiency up here. If you look, if you look at the second candle, it trades down like this and wicks back up. Third candle trades back down again, wicks back up. Next candle trades back down below, and we get that full sell side. So we have a fair value gap, but also inside of that fair value gap, we have a redelivered rebalance. That redelivered rebalance is the range from the low of this candle to the eye of that candle, right? So all of this portion price action, we only had delivery on sell side, right? So if we wanted to see downside, right, it kind of makes sense that we go back up to essentially rebalance all of that, you know, sell side inefficiency, and it looks like we want to continue lower. Now, the one thing I wanted to maintain with Bitcoin is the market never ever makes, rarely ever, not ever, but rarely would you ever see price make a V bottom in a downtrend. Now, remember, like I've talked about on previous videos, that is fine for retracements or stop runs. This is not a retracement. This is not a stop run. This is a downtrend, essentially. All right, so you have to be, especially if you're trying to hedge long against obvious bearish order flow, right? You have to be nimble with the way you go about managing your positions. You cannot just marry your ideas. And essentially, what I'm looking at here is one of the confirmations we're looking for on Bitcoin going into Monday was we wanted to see Sunday's candle kind of like trade up above Saturday's candle. That would potentially make this a propulsion block. Now, that has not changed so far. You can see currently that we are starting to see bearishness in this candle. You have to understand that all of this can change. All of this can flip, turn bullish, and continue to trade higher, right? But again, because we are in a downtrend, if we were in an uptrend, we would leave our positions as is, because again, in an uptrend, you have a higher odd of being profitable being a buyer versus being a seller, and vice versa for downtrends, right? So at this point here, we're long, and that's a bit risky because obviously this is the downtrend and we're just trying to protect positions. Now, even if we do end up selling, trading below the sell side liquidity and our initial entry level does get stopped out a break even, then obviously what we do here is we just wait for better entries, right? We wait to see if we can position better for longs or we can position better for shorts, right? But at this point here, there really is nothing to do except just watch the market and see the kind of feedback we get in terms of price delivery. All right, so in terms of good news, we're starting to see oil pop back up. Beautiful delivery. So swing entries. Again, I already talked about this morning. Let me just move on over to equities real quick. Now, I wanted to focus on equities because I talked about equities this morning, and I talked about the fact that I really do not think that we're done with the run on sell side liquidity. Now, we met my first target objective in equities on the S&P market. I gave this slowdown here and this slowdown here as two downside objectives we're looking for in terms of short-term drawn liquidity. Prices met that, and you can see that beautiful distribution away from those levels. And also the same with NASDAQ, right? You can see NASDAQ is also traded perfectly down to a level. Now, personally, I think that on NASDAQ, we're going to see a lot more downside. And this is where I want to see NASDAQ trade down into essentially, right? So I do think, especially with the Dow, a lot of people will be kind of like convinced that we're now in that bullish trend. Now, remember, we are looking for downside, but that downside thesis, that downside narrative is a short-term narrative. In terms of our near-term narrative, like what do I think overall in terms of our near-term or medium-term order flow or immediate term delivery, I still very much think we're bullish on the equities market. But what I would like to see is after just a long time consolidated, I want you to study the price action here on the Dow, right? So we have a consolidation profile in here, and you can see the market just runs out of that consolidation profile. That's a potential power three profile, right? As a reference. So I would expect to see kind of like an aggressive sell off from here on the Dow. Again, remember we have NFP on Wednesday, so we're gonna be all over this every single day until post NFP. But what I would like to see is I would like to see a really aggressive run on sell stop that kind of like brings panic into the market, puts fear into people, and we clear out sell side liquidity, right? So that's what I kind of like would want to see with the Dow, and obviously for the other index or indices, the tradable ones, we have Nasdaq. For Nasdaq, this bearish order block and volume balance are two key levels where I would want to see price sell off from. Now, this is Monday. On Monday, we could sell off from here and continue to trade lower. But I would advocate for patience, right? Patience in the sense that, again, like I told the members this morning, we don't want to be trading Monday because Monday has an economic release, and the rest of the weekly or economic calendar, they're absolutely stacked. All right, so you can see in Tuesday we have core just the numbers 8:30. Wednesday we have NFP 8:30. Thursday unemployment claim numbers 8:30. Friday CPI and core CPI numbers also 8:30. So a lot of economic releases, and not just random economic releases, key metrics, key economic metrics. Right, so we understand that there is going to be a lot of volatility this week, which is why, like I said at the start on this morning's commentary, you have to exercise patience. So what you do until post NFP release is going into Tuesday, because Tuesday, obviously we're not trading on Monday. Sure, we do have carryover positions from last week, but we're not doing anything except just managing existing positions, right? But in terms of looking to position ourselves for new trades or new investments or new swing trade ideas, I would rather we don't do that until possibly Tuesday. And what I talked about with Tuesday's price delivery is we're gonna define low probability signatures, right? So that is the approach going to Tuesday. So we're going to have a checklist of low probability signatures that we're going to be looking for. And if we see those low probability signatures going into the New York session on Tuesday, we're not gonna trade on Tuesday. We're instead gonna wait until post NFP on Wednesday, right? So that is the plan of approach for now. Of course, after NFP, then we're going to start to hunt for setups if we don't have any positions going into NFP on Wednesday, right? So again, but for now, I do think that we see a lot more lower price on Nasdaq, and the same thing also applies on the S&P market, right? So we could see one more stop run above this line here. So I'm not putting that out of the cards, right? Again, the entire narrative is that we're looking for weakness on the equities market. So if we don't get the shorts, again, we're not trading on Monday, but if we don't get a very favorable bearish confirmation or feedback today, right, then that just opens up a possible run for buy side that clears out buy side liquidity, and then finally we sell off. So I'm looking at the possibilities of a sweep of that buy side liquidity, and we turbocharge into this sell side. This is what stands out to me. All right, if you look at the entire price delivery in here, it is a consolidation profile. Where are we relative to our consolidation? We're still at the top end of our consolidation profile, right? So again, it makes a lot of sense that we see lower prices from here, and this is my major term liquidity. So either we see that run on buy side liquidity, or from this propulsion block. So we have the bottom of the propulsion block, the mean threshold, which is where today's high, Monday, perfectly traded up into. So these are two key levels where I do want to see shorts from, right? So shorts in the S&P market and also NASDAQ. And just to refresh real quick, Bitcoin, we have stops at break even just to protect our positions, and we are still leveraging on oil and of course on currencies. So I'll see you guys all on the next one. In the meantime, trade safe. Peace.